Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hey guys, it's Alex Pardo. I'm very excited and pumped to share with you another strategy that's going to help you in your real estate business. And I'm going to be hosting today's REI Classroom, where I'm going to cover a creative joint venture strategy that you may not have thought of. It's a little bit outside the box. So I hope that you find this tip useful and deploy it in your business.
This REI Classroom real estate lesson is sponsored by uglyopportunities.com.
So what happens when we lock up properties and we market them? Sometimes deals are tight, right? Sometimes we're not able to buy properties at 60, 70 cents on the dollar. And so if you know that there's a property that's in a good part of town that has a lot of cash buyer activity, and if you think that the property's tight, and what I mean by tight is, let's say you're buying a property and you put it under contract at 75, maybe even 80 cents on the dollar, okay? And you feel that it's not a great buy and hold property for a landlord, and for a fix and flip investor, the margins just aren't there. And I'm gonna give you an example in a quick minute here, but I just want you to kind of get a 30,000 foot view of what I'm talking about here. If you feel that the margins are too tight, one of the things you can do, and this is something that we've done in our business, and it's kind of, you have to think outside the box. You have a couple different options. You can let the property go. You can try to get a price reduction, or this strategy that I'm going to share with you is partnering with one of your buyers and basically assigning them your contract at the same purchase price that you have with the seller, and having a written agreement with them that once they sell the property to a retail buyer on the back end, they're going to cut you in on the share of the profit. So there's a property that we contracted. This is probably going back 4, 5, 6 months now. In a good part of town, we contracted the property at $260,000. After repaired value on this property was about $320,000, and it needed about $40,000 to $50,000 in repairs. So obviously, it's not great for a buy and hold investor, just because a very low return on investment at a $260,000 purchase price. And for a fix and flip investor that has to put $40,000 into it, they're into it at $300,000 with an after repaired value of $320,000. It just didn't make a lot of sense. So we couldn't really mark it up at the $270,000, $280,000 that we would like to get on a wholesale property. So on this particular deal, what we did was I told the investor, I said, hey, listen, I'm going to be totally transparent with you. We have this property locked up at $260,000. I think at $260,000, it might make more sense for you than what we're asking, which was, I think, $274,900. And this particular rehabber he could cut corners in terms of a $40,000 rehab really for him would probably only cost him $20,000 or $25,000. So for him, it made sense. He had those kind of connections. So what we did was we partnered with him, and we had an agreement where once he fixes and retails the property, 20% of his net profit would come back to us. And so what we did was we assigned our contract at $260,000 over to this rehabber. So he got a decent deal. It was because it was a good area. He decided to move forward with the deal, and he ultimately ended up selling that property at $325,000. And we made a couple $1,000s in the deal. It really wasn't much, but the seller was not willing to do a price reduction. They were stuck on their price of $260,000, and it was a situation where we were able to kind of make lemonade out of lemons, I guess, so to speak. I think where most people would just have passed on the deal if they couldn't get a price reduction, this was a way that we were able to make a few extra $1,000 and deliver a property to one of our top buyers. So hopefully you enjoyed that. I think one of the things I want to encourage you and challenge you to do is kind of think outside the box whenever you get these properties. If it's not a traditional wholesale deal, or if you're not able to work out a terms type deal with the seller, they're not willing to do a price reduction, think about how else you can monetize these leads that come down your marketing funnel.
Homevestors, the We Buy Ugly Houses folks, is a franchise system of hundreds of real estate investors that have purchased over 65,000 houses. If you'd like to learn more about the most powerful real estate investing system in existence, whether you're a pro looking to take your business to the next level, or whether you have no experience at all but a burning passion to be successful in real estate investing, please visit flipnerd.com/ugly to learn more. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of FlipNerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at FlipNerd.com. Please check out the FlipNerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at FlipNerd.com/shows, or simply search for FlipNerd in the iTunes Store.